All right, good evening, everyone. So, welcome for our webinar today, which is Palm Market Fundamentals and Price Outlook. So, I'll be your MC today. So, I'm Jun Hang. I'm the dealer from Phillip Capital, Sdn Bhd. So, before we start, I will go with a general disclaimer on our webinar itself. So, this webinar is solely for education purpose. So, there are no intention for any buy or sell call here. So, any trades that you enter from here is based on your own risk. Okay, so about Phillip Capital, I will just briefly go through the introduction on a very quick one. So about Phillip Capital Sdn Bhd, so it is incorporated on 7 October 1995. So it's wholly owned subsidiaries of Phillip Capital Holdings Sdn Bhd, and you might know them as the Phillip Future Sdn Bhd as before this. So we are also one of the trading participant of Bursa Malaysia Derivative Berhad and sell as well as the participating organization of Bursa Malaysia Securities Berhad. So we also one of the holder of Capital Market Services License (CMSL). Okay, so here is our Phillip office nationwide. So you can see from here we do have 11 Phillip investor center across the Malaysia. So if you need any you have any inquiries or you need any help regarding your trades or any inquiries, you can drop by to your nearest office nearby you. Okay, so for us, Phillip, is that we are one of the award-winning broker, which is we are actually winning on the best overall derivative trading participant. So we won kind of for champion, we do have 2018 2019, and we also won best retail derivative trading participant and also best institutional derivative trading participant and also best trading participant in commodity derivatives. So these are some of the award that we won across the years. Okay, so we do have our global network across the global, whereby it covers Europe, America and Asia, I would say. Okay, so another one is we are actually involved in our global coverage is on the exchanges, is that we have exchanges from US itself, CME, CBOT, COMEX, NYMEX. Okay, we do have for Eurex as well, which is a Euro exchange. Another one is the Japan exchange, so-called JPX, and of course Hong Kong exchange. And you can actually trade Bursa Malaysia exchange with us as well. So another one is the Singapore exchange, so-called SGX. Okay, so Phillip do provide one-stop solution for your trading. Okay, so this will be the three major product that Phillip Capital is actually providing. So number one is the futures. So we do have varieties of futures that we are providing. So some of it is index futures, agricultural futures, metal futures, the well-known gold that people are trading. So another one is the equities and stock. So we do provide Malaysia shares, US shares, and Hong Kong shares, and Singapore shares as well. So another major product is the CFD, so-called contracts for difference. We do provide this product as well. Okay, so why do you choose Phillip Capital as your broker of choice? Number one, of course, as I mentioned earlier, we are one of the award-winning multi-asset broker. On the second one is we do have 24 broking and execution support. Another one is we do provide advisory services as like if you need any inquiries or maybe coaching, we do provide that to our client as well. So we do provide the latest market news to our client, whereby we will be giving out daily commentary, all these notes that will help you in the trading lah. And another one is the wide array of product. As you can see, we do cover a lot of exchanges, especially on the derivative and the securities lah. Another one, we do have the free online account opening, which is from the online. Okay, so next how do you get started with Phillip is that we do provide free one-to-one coaching session. Another one is the free seminar and webinar whereas you are joining for now. Another one is our account opening is absolutely free when you open an account with us. Okay, so for free one-to-one coaching, if you are interested, we will actually give you a insight on what is the introduction to future CFD and stock trading. Another one is the product knowledge. And of course, we will actually teach you on our platform coaching. So of course, I will show you on our platform later. Another one is the charting system as well. Okay, so I'll give you guys approximately 20 seconds for you to scan for our upcoming seminars and webinar. We do have some of the physical event coming out for the market outlook for US, Singapore, and covering Malaysia market as well. So you can try to scan on this QR code if you are interested to join our upcoming event. Okay, so I'll move on to the next slide. Okay, so we do have our weekly market call whereby we will be presenting on the market view and updates on the weekly report. We say okay. So every Monday 11 a.m. it will be presented by our Philip Securities research team, and we do have live counter technical analysis whereby we will be discover weekly trends and potential entry and exit level through technical analysis. So we will have our technical analyst Zain out, whereby he will actually uh, give out all this market call on every Monday 8 p.m. lah. So you can scan if you are interested to join. Okay. So if you want to enjoy a hassle-free online account opening whereby you can just open this 3 account with us, you can just simply scan this QR code, then you can open 3 account with us. So you can scan the QR code here if you are interested to open an account with us. Okay, so in terms of our trading platform, as I mentioned earlier as well, so for futures, our trading platform is called Philip Nova 2.0. So for this trading platform, it has over 90 technical indicators, and you can actually buy and sell directly from the chart. And we do offer market depth trading tools as well. So for the platform itself, it has local and foreign product, and of course live market news and price alert. Okay, so I think most of the traders or investor, I think this trading view is kind of well known across the trading world, right? So currently, Philip Nova is actually collaborating with TradingView, whereby the live chart is actually powered by TradingView. So the chart that you see from TradingView is actually the same that you will be seeing in the Philip Nova 2.0 lah. So basically, all the indicators you can use from TradingView, you can use it on our Philip Nova trading platform as well. Okay, so for up next, so we do have trading platform for our stock. So this is the Boyum's Global MY 2.0. So we do release a 3.0 version for the mobile. So we do cover Malaysia, US, Singapore, Hong Kong, and Australia stocks. So number one is the all-in-one watch list, charting indicators, action top 30 movers, powerful stock analytics, and market depth. Okay, so for the CFD, we do have this trading platform so-called Philip CFD Trader. So it is a ideal all-purpose trading platform whereby the the interface is user friendly. Then is we do have live charting, price alert, yeah, and so on lah. Okay, so we do have our ongoing promotion right now whereby you can register a new account with us, so you'll be getting price cash reward when you open an account with us. So if you are interested, you can actually scan on this QR code to understand more on the info lah. Okay, so I give you guys 20 seconds to scan on this. Okay, so let's move on to the main agenda for today. So today is our pleasure to have Dr. Sathia Varqa. So he's the managing the editor and analyst with Fastmarkets Palm Oil Analytics, so-called POA. So an online publisher of palm oil daily news, price data, and analysis based in Singapore. So serving global commodity markets, POA was acquired by Fastmarkets in February 2023. POA also published daily reports covering price assessment, analysis of key data, and market commentary. I would say Dr. Sathya is our go-to guy when it comes to commodity trading, especially the palm market. So without delaying further, I will pass over to our speaker today, Dr. Sathya. Hi, Dr. Sathya. I think you are up now. So let me
Yeah, thank
just
you.
okay, you can try to share your screen right now.
Okay, it doesn't let me share because I have the same thing like just now. So you have to make me a host, I think. Okay.
Okay, you can try
Uh,
now.
okay, just 1 second. Okay, great. You can see my slides now.
Yep, we can see your slide.
Excellent, very good. Okay, I can see myself and I can see the slides. Let me see. Okay, good evening, everybody. Good morning, good afternoon, wherever you are joining from. Thank you, June, for your introduction and also to the products that's offered by Philip Futures and all the relevant information. I hope you find this session useful and helps you with your trading decisions, mainly looking at the fundamentals today. So, like June said, my name is Sathya. I come from Fast Markets. Fast Markets is a publisher of palm oil news, price, and data. Okay, 1 second, let me just figure out if I can move the slides. 1 second, I have to shift the slides from this screen here. Okay, yeah. So you can see my next slides now. So Fast Markets is a publisher with a history of 150 years or so. We publish about more than 1,000 prices on a daily basis, covering from grains, veg oils, animal fats, to hide, leather, and industrial products all over the world. We have offices ranging from United States, South America, Middle East, Europe, and Asia. So, what will I be covering today? Today, I'm pleased to let you know that I'll be covering an overview of the palm market. I just about have 2 slides on that. A little bit about palm pricing. How does it work? What are the components of pricing? Third, main factors to watch if you are a daily trader, if you're a speculative trader, if you're someone who looks at the market and you want to look at fundamentals, drivers of the prices, then part 3 is very important for you. Fourth, main factors in palm pricing in the remaining part of this year and also into the first and the second quarter of next year. Finally, I offer a brief conclusion with a summary and a price outlook. Okay, first slide here, overview of top 5 producers and exporters. The global palm market is dominated by 2 large producers, Indonesia and Malaysia. Indonesia overtook Malaysia as the leading producer in about 2000, and since then Indonesia has been a leading producer, commanding about 60% of the global market production of CPO. This is followed by Thailand, about 4%, Indonesia, Malaysia, followed by Thailand, and then Colombia, Nigeria, and other minor producers. So you can get an indication that Indonesia, Malaysia dominate the production of CPO by about 84% of the global market. Also worthwhile remembering that the global market, and you as a trader should be looking at the Malaysian supply and demand, although Malaysia is the second largest producer, because Malaysian data is reliable, timely and accurate. MPOB, Malaysian Palm Oil Board, publishes the data on the 10th of every month, and this data is considered as the global benchmark data, not the Indonesian data published by GapKey, which is not mandatory, somewhat reliable, but always late. But that doesn't mean we can totally ignore Indonesia. We have to pay attention to what is happening in Indonesia. I will give you some pointers on that. On the right side, global palm oil exporters. So the structure is still the same. Indonesia is a dominant exporter, followed by Malaysia. Indonesia is also the largest domestic user of palm products for biodiesel, for food, and for oleochemicals. So in summary, this is what I said. There are some additional points which I will not mention, but you can read at your own time. But one thing to remember is that palm olein is produced from CPO refined into RBD palm oil and then fractionated into RBD palm olein. RBD palm olein is the most consumed edible oil. Palm oil is the cheapest edible oil compared to all the other oils. However, sometimes palm oil can become more expensive than the others, and I will tell you what does that mean for prices. Okay, first slide here on palm pricing fundamentals, CPO futures. So palm prices are discovered. So if somebody wants to know, hey, what is CPO price today? What is palm olein price today? What is stearin price today? The starting point is CPO futures. CPO futures is a standardized contract that is traded on Bursa Malaysia, and you can open an account with Philips and you can trade that. It's a derivative market. That means you can buy a contract on the Bursa Malaysia Derivative Exchange using a broker like Philips, and you can buy and sell the contract depending on your view of the market. You can take a long position, you can take a short position, or you don't even have to take a position if you think you are not sure. But crude palm oil is not the only futures market. There are many other futures market in the world. The biggest one is crude oil, which is traded on the New York Commodity Exchange. And there are also sugar traded on ICE Exchange, coffee, rubber on POCOM Commodity Exchange, and then soya complex, which is soya beans, soya bean oil, and soya meal, which is actively traded on the Chicago Board of Trade, CBOT. So to discover prices, you have CPO futures, but you also have another instrument, another way, which is cash market. Cash markets are like iron ore, bananas, eggs, and many others. So if you go to a supermarket, you want to buy a tray of eggs. You look at the eggs, it's a physical product, it's there, and then there's a price label there. So you know this is the price I pay for this product. Whereas palm products also has a label, but that price, if you look above it, it's a derivatives, comes from CPO futures, and then there is exchange rate, traded price, freight price. At the end, the blenders will put a price based on where the futures market is. So that means you must start thinking, if futures market is volatile, but the price I pay in the supermarket is fixed. That is true. That is true. Okay, but that means traders will always be adjusting their prices based on how the CPO futures is behaving. There are also many other exchanges for agriculture products. Like I told you, Chicago Board of Trade is one. ICE Exchange in Canada has a commodity called canola, which is traded, Canadian oil or rapeseed oil, which is traded. Okay, let's move a little bit to component of pricing. because we are looking at CPO from the futures market point, a futures market price is made up of several components. If you buy a product like a milk carton, has only two parts. One is the cost of the raw material and the markup. The markup is the profit, if you like. But on the futures market, we have few components: fundamentals, which I'm going to focus on, substitute. So if palm is like this, how is bean oil? If rapeseed oil behaves like this, how is palm oil behaving? So they are all interconnected by the way the prices behave. Technicals is very common. Brokers always publish this report. I'm sure you also receive a report from Phillips and other brokers, which shows, hey, this is the resistance point, this is the support point, and the graph is behaving like this. I think the graph is going to fall. So you take a position based on that technical view. Then there is sentiments. How do you feel? So there's bullish sentiments, there is bearish sentiment, there is mixed sentiment, and so on. And then there is speculation, pure speculation. It's like a casino. I think the price are going to go up on Monday. You put a long position, and then you wait and take a bet and see. And then finally, there's paranoia and anxiety and euphoria. Sometimes people are excited. Hey, Indonesia just announced biodiesel B50. Prices are rising. I'm also going to jump in and take a ride on the upward market. There is also paranoia. Oh, Donald Trump is elected to become the president of the United States. I think he's going to impose tariffs on China. And I think bean oil prices is going to collapse and palm prices are going to rise. Again, you take a position based on that. So the point I want to make is that in a futures market, in any futures market, a price is determined by a combination of components: fundamental, substitutes, technical, sentiment, speculation, paranoia, and others we don't even know. However, all prices at the end of the day must converge to fundamentals. It's the same thing whether it's a property market, whether it's a automotive market, whether it's the construction market. At the end of the day, everything has to come back to fundamentals. So what do I mean by fundamentals? By fundamentals, I mean supply and demand. How does related oils behave? Weather, policies, and externals like the ringgit behavior, the crude oil behavior, the geopolitics, and so on. So these are just some of the main ones. And I want to tell you what are the main fundamentals you should be focusing on when trading CPO futures. And that's what I do. I look at fundamentals. I'm not a technical person. I don't give advice on sentiments, but just purely based on fundamentals. But also remember, they are all important. They're all important, but I would say the most important is the fundamentals. So fundamentally, what are the big developments in 2024? So these are a list that I've made, but not all are. I'm not going to go through all of them, but I will highlight some key points, right? Some key points. At the moment, if you like, at this moment, CPO futures trading is mainly dominated by policies, I would say. The European Union deforestation rules, Indian import tariffs, Indonesian tax reforms, and Malaysia is trying to adjust their windfall taxes. So policies are driving the market at the moment, but at the same time, there are other factors that is compounding it. Okay, let's look at CPO futures. So I'm looking at CPO futures third month. Third month is the benchmark month on the CPO futures contract, right? There are many months, right? October, November, December, January, February. So this is the third month. So if you look at the red line, the prices are somewhat stagnant, if you like. There's not been major shift compared to the previous years. The blue line is 2022 prices, where we saw multiple record high prices. Okay, so we are not going to witness that because we do not have the same scenario like we saw in 2022, namely Ukraine-Russian war. We had the COVID, shortage of labor, lower production. Indonesia temporarily banned the export of palm products, and Argentina experienced severe drought, which decimated the soya bean production and subsequently soya bean oil. Okay, so this is just a good chart to look at where we are relative to previous years. Okay, this is a chart I just added just after market close today. I want you to focus on the red line. This is a chart that shows you the closing market position on these days: 2nd of July, 4th of June, 23rd September, and 1st of August. So the red line is the steepest, if you like. The steeper the curve, the wider the calendar spreads are. That means month 1 price is at a premium compared to month 8 on the 23rd of September. So the steeper the curve, the greater opportunity for you to undertake calendar spread trading. So there are many spreads. You can do calendar spread, you can do cross commodity spread, you can do multi-country spread, and so on. But here I want to just let you know that, hey, the curve is steep compared to the 2nd of July. 2nd of July and the 4th of June is a bit almost flat. If it's flat, you can't do really make a lot of margins. But the steeper the curve, the better it is for you to do calendar spread, the greater opportunity. That's what I'm saying. And why it is steeper on month 1 today is because the market thinks nearby supply is short. So when the nearby supply is short, tight, then the prices are higher. And that's true when we saw the SPOMA data released today. So this is the futures market dynamic. So in the cash market, if you see the cash market, I still do this. So cash market means this is the CPO sold by a mill. So if you go to a mill, say in Johor, Felda Global, this is the average price they are selling the red line this year compared to last year. And the prices are just up, slightly up only, not significantly up, just by 2%. However, exports are higher this year compared to last year. So price increase is small, but Malaysian exports are quite significantly higher to last year. So plantations are doing well. So again, if you're doing equities market, some plantations are poised to do quite well. And you saw the results from United Plantations, which has done significantly well compared to last year. Okay. Okay, now moving on to daily pricing. So these are the for people who are looking at daily CPO futures. How is it going to open? How is it going to open? How is it going to behave? What are the key fundamentals I need to look at? So first thing you want to look at is related oils. So before CPO Bursa Malaysia opens, you can go to your trading screen. Before CPO futures starts trading at 10:30 a.m. Singapore, Malaysia, Hong Kong time. So before that, Dalian is already on. Dalian is trading. So you want to look at related oils on Dalian Commodity Exchange. You want to look at palm oil, how is it trading? You want to look at soya bean oil, how it's trading. You can also look at the Zhengzhou Exchange, how is rapeseed oil trading. Okay, so these are the trading numbers you can look at, okay, before Bursa Malaysia opens, because they track very closely. You should also look at the soya bean oil settlement overnight on the CBOT, Chicago Board of Trade. How did that close? So usually these oils, they track each other because they're all competing for market share. So I'll show you some slides to prove that the related oils are related to each other. Second point is you need to look at fundamentals. What are the main fundamentals you need to look at? There are 4 main variables, and I will take you through them and where to find them. Production data is published by Malaysian Palm Oil Board, but also others publish it, like the SPOMA, I said, Southern Peninsula Palm Oil Millers Association. So they give an indication of how production is in Johor, which is the largest CPO producer in Malaysia. And also MPOA, Malaysian Palm Oil Association. They also publish data from the 1st to the 20th of the month and then for the full month. So MPOA membership is dominated by large plantations, and they account for 40% of oil palm planted area. So that means you already get some numbers before the actual MPOB data. Export data is for Malaysia is widely and frequently and regularly available. If you don't get it, you can message me or WhatsApp me. I'm happy to include you in the broadcast. So ITS, MSPEC, SGS, these are cargo surveyors and they publish the numbers. So it gives us an indication how Malaysian exports are doing. So you don't have to wait for the MPOB numbers. You don't have to wait for the full month, right? We roughly know how exports are doing. And that's a good indication because that will tell us how stocks are going to behave. Then the second last point is crude oil. We also look at crude oil daily behavior to explain the CPO futures. Although crude oil has been quite stagnant this year. And last point is policies. I just mentioned earlier, Indonesia has policy changes every month, reference price changes every month, and how does that affect CPO futures? So let me just move on quickly. So first chart here, sorry, not the first chart for this part. So this is the point I was trying to make. If you look at this chart here, I put rapeseed oil, soya bean oil, sun oil, and RBD palm oil. 2 years ago, as I mentioned, we saw multiple historic highs and already given you the reason. So we saw prices very high here for all the oils, not just palm. So you cannot look at palm in isolation. You cannot just look at palm and say, hey, palm is, is the king. No. If palm prices are too high, buyers will switch to other oils. If palm oil is too low, buyers will switch from soybean oil, rapeseed oil to buying palm oil. And if you look at more recent months, the four prices have been very strongly converging to each other. They're almost kissing each other and overlaying on each other. And this has not been the case. Palm oil has always been the cheapest, but now we are finding during some months, palm is not the cheapest. Palm is more expensive than the other oils. And I think this is going to be a normal phenomenon. Okay, although palm is a perennial crop, that means you always have production compared to sun, soybean, rapeseed, cotton, groundnut, peanut, which are all seasonal crops where you prepare, plant, bloom, harvest, and then back again to preparing. Okay, when I say related edible oils, what are the main oils and where to look for them? So here are they. So when you have the slides available for you, you can check this out. So if you have access to your terminal, if you have an account with Philips, then you can see all these prices live. If you can see on the website too, but they're always delayed by about 15 minutes. Okay, so that's the advantage of having an account with Philips. So soybean oil, as I said, so some people call it Chicago Mercantile Exchange. Some people call it Chicago Board of Trade. They're the same, CBOT or CME. So you can look at how CME prices behave post the previous day, how soybean oil is doing at Asia opening hours, how RBD palm oil is doing at Asia opening hours, Dahlia at Asia hours. Then rapeseed oil, as I mentioned, and canola. Canola is not so strongly correlated, but you can have a look at it on the previous day close. Canola numbers are available on the website for free. Also delayed though. Okay, but the first three are the key ones. If you're looking at CPO futures, daily trade. If you're a daily trader, you want to know where the market is going, how the market is opening. Okay, next one, looking at fundamentals, right? Looking at fundamentals. So when I say fundamentals, the four main variables you want to look at is production, exports, imports, and 8-month stock. And this is published by the Malaysian Palm Oil Board. MPOB is considered as the most reliable and the most go-to publisher of palm oil supply and demand data. Even the global market looks at it, It is published on the 10th of every month at 12:30 p.m. Malaysia Singapore time. So when the report comes out, it looks like this. So what I want you to do is just focus on these numbers here, right? So remember, this is the actual data. When the actual data is published, it looks like this. However, before the data is published, there are a lot of forecasts, estimates published by Bloomberg, Reuters, even we publish, and we also write about it. So just be careful. Sometimes the market has already priced in the estimates, the expectations. So when this report is published, traders are looking at, are there any surprises in the market? Stocks were supposed to go up by 5%, for example, but here the actual data shows a stock went up by 12%. So that's bearish. Stocks are too high. But if you're not familiar with this, I suggest you go look at the website and see how the data looks like. So production in Malaysia is doing quite well. So this is the first point. Production in Malaysia is doing quite well, better than last year. Production, in fact, is running about 10% higher compared to last year. However, production rise is not so uniform. Peninsula production is very good. Sabah is marginally better, but Sabah, the largest CPO producer in Malaysia, is doing badly. Although the planters there are assuring us that Sabah production will rise, will become better in September, October, November. So that's this month. So we will have to see when the data comes up for September on the 10th of October. So why I want to tell you this is because when production is good, prices are under pressure. And that's one reason why you see these prices, especially in the first half of the year, prices have been on a lot of pressure because production in Malaysia has done better than many people expected. Okay, this year production numbers we think will be higher by about 1 million tons compared to last year, and I'll just show you that. So production is one variable. Second one you should look at is the in-month stocks. So generally, when the stocks are high, prices are low. When stocks are low, prices are high. That's the general relationship, a negative relationship, if you like, or inversely related. However, you have to just pay attention that sometimes we can also have, like right now, stocks are high, but prices are still rising higher day by day. See, like if you observe this chart here, May 2023, June 2023, July 2023. So stocks are very low, but prices picked up on a time lag. So stocks are low, but prices didn't go up immediately, but prices went up in the few months ahead. This is, I'm using a general average monthly average price. So if you look at it on a daily basis, the situation will be different. But the main point here is that there's a negative relationship between price and in-month stocks. And this is very well established relationship. Okay, another point on fundamentals is that I mentioned earlier that palm is the cheapest, but sometimes, especially beginning of this year, palm became more expensive than bean oil. This is not good because if palm is more expensive than bean oil, which is the closest competitor, then more and more buyers in India, in Africa, in China, in Myanmar, in the Philippines are going to switch to buying cheaper oil. When they buy cheaper oil, Malaysian palm sales are lower, export demand is lower, and stocks are going to rise. In order to fix this problem, palm prices has to come down lower in order to command the market share. So at the moment, in the last 1 month, palm prices have been trending higher than bean oil, like the circle I've drawn here. So palm prices are still higher, and that means what I'm going to say is that palm prices must come down in order to recapture the export demand. Otherwise, palm export demand will be down in October and November. That's for sure. So either palm prices must come down or bean oil prices must go up. Bean oil prices are unlikely to go up because soya bean going through very good harvest in the United States, and therefore there's a lot of pressure for beans and bean oil prices to remain low. Okay, exports. I spoke a little bit about exports. I don't want to dwell too much on these. Malaysian exports, like production, is also doing well. However, exports to China is bad, and this is likely to remain so as China struggles to recover from its domestic economic problems, which is no surprise. I think all analysts agree that Chinese economy is not doing as well as expected. Okay. So the main point here is that if China keeps its exports low, if Malaysian exports to China is low, like this chart here, bottom right, minus 55,000, then Malaysian stocks again can go up. This is particularly a problem because Malaysia is going through peak production season right now. September, October, November, generally the peak production. So I'll recap. I spoke about overview of the palm market. I spoke about the components of CPO futures, some big developments in 2024. What are the daily pricing fundamentals we need to look at? Production, exports, and stocks. And I want to just briefly mention about the ringgit, EUDR rules, my production forecast for Malaysia and Indonesia, and then I will stop speaking. Okay, ringgit, Malaysian ringgit has been very strong, rising to over a year high, and generally a stronger ringgit is bad for exports because it makes Malaysian goods and services expensive to international buyers. That means a stronger ringgit means CPO, palm oil, palm stearin, palm fatty acid are more expensive for international buyers. They have to use more dollars to convert to ringgit to pay the Malaysian traders in ringgit. So that is negative for exports. So we are going through peak production right now. Ringgit is strong. Palm oil is less competitive to bean oil, and United States is going through soybean harvest season in September, October, November. So you can get a sense that I'm a bit bearish on where the prices are right now for this period. Okay, so the red line is the ringgit. So going down means stronger, and going up means weaker. Okay, if you're going down, that means if the red line is going down, you use $1 buys less ringgit. Okay? If you buy more ringgit, means ringgit is cheaper. Okay, next slide on EUDR. This is spoken a lot at conferences, in palm conferences, at cocoa conferences, at coffee conferences. So I think it's only fair that I let you know. So on the 30th of December 2024, the European Union will be enforcing the EUDR rules. What does it mean? EUDR stands for European Union Deforestation Regulation, deforestation free regulation, which states that any products entering the EU, any of these 7 products listed here, coffee, coke, palm, cocoa, soya, cattle, timber, and rubber, if they're entering the EU market, they must be produced without deforestation, okay, from the 1st of January 2020. So if any palm products, like CPO, PKO, palm oil, palm fatty acid are produced from a forested land in after 1st January 2020, the product will not be allowed to enter the EU. Second is that if the product is deforestation free, so it complies with the European Union standards, then it must also be produced in accordance to the legislation of the country, whether it's the labor law, social laws, or welfare laws. It must comply. And thirdly, a due diligence report must be produced according to the EU requirements to prove this A and B. Okay, so as far as I understand, the Malaysian sustainable palm oil is trying to incorporate most of its terms and principles and criteria into the due diligence. But that's still an ongoing thing. But Malaysia is generally, I think, prepared, particularly big plantation houses. You may have seen the last news that Sime Darby or Guthrie, Sime Darby, made its first shipment of CPO and other products that complies to the EUDR rules. What does it mean for you as a trader? It means that big companies, big plantations that are listed, that are prepared, will be able to take advantage of this premium. So now everybody is selling, but come 30th December 2024 onwards, only those producers and exporters that are compliant will be able to enter the market. So there are some big plantation houses that are ready, who will be able to enjoy sales into the EU market, and you can watch their share prices, how they are doing. And there will be many medium smallholders who are likely to be shut out from the market, from the EU, which means they may have to find some other alternative markets. The EU buys around 6 million tons of palm oil every year, 6 million tons, and these from exports from Malaysia to the EU are generally on a declining trend over the years as the regulations and the scrutiny increases. Okay, a few more slides and then I will stop speaking. This is my projection for Malaysia. We think Malaysian production will improve by 5% compared to last year, and that means about 19.5 million metric tons based on favorable weather conditions, greater labor productivity this year compared to last year, and there is more prevalent application of fertilizer because fertilizer prices have dropped this year. So these three factors are already giving production a rise in the first 8 months, and we think Malaysia should end up at about 19.5 million metric tons, which is the best, as you can see from the chart here. It's the best in 1, 2, 3, 4, best in 5 years. However, production next year, it's too early to say, that's why we call it projection, might be equal or slightly lower than 19.5 million metric tons. Over in Indonesia, the outlook is a bit pessimistic. Production is unlikely to improve because they have been facing lower rainfall, extended dry periods in the Kalimantan region, which is one of the main expanding plantation area. Kalimantan and Sumatra make up about 90% of CPO production in Indonesia. So for that reason, Indonesian production will not improve, and that means Indonesia is increasing their biodiesel mandate from B35 to B40. So B40 means more CPO is used in biodiesel blending. So it could be a very tight situation at the start of the year for Indonesia and for Malaysia, and I'll tell you why. This is the summary of my numbers with the 2024 estimate and 2025 projection. You can have a look at it at your own time. So stocks above 2 million was always considered bearish, but I think 2 million tons threshold is normal. So stocks can go higher than 2 million or below 2 million. The market does not panic nowadays. Okay, summary. So what does that mean for prices? So CPO futures is on a bullish run at the moment, but there are several bearish factors lurking. So just be careful. Palm does not have competitiveness above bean oil. Um, so buyers like India are going to be increasingly be reliant on bean oil. Not so much on sunflower oil because shipment from sunflower oil from Black Sea may not be so secure, although some friends in Russia say there's no problem with the shipment. Then the ringgit is strong, which is generally not good for exports, and I think the strong ringgit will be sustained for a while. Weak export demand to China, and export demand to China is weak right now, but it might pick up in the first quarter because there's Chinese New Year in the first quarter, and Ramadan is also in the first quarter. So shipment might just pick up very quickly in the first quarter. Performance from Sabah is critical to Malaysian CPO production target to reach 19.5 million metric tons. So although I'm optimistic about Malaysian production, a lot depends on how Sabah does. Palm product prices are expected to remain between 3,007 to 3,000 ringgit on the CPO futures active month. So that means although prices have tested 4,000 today, prices retreated, and I think this is the band at which it will remain. Indonesia has announced B40 biodiesel program. That means 40% palm methyl ester blended with regular diesel, you get biodiesel. So the higher the blend rate, the more CPO needs to be used. But we do not think that biodiesel mandate will be implemented nationally on the 1st of January 2025, although the impression is like that. It's most likely be staggered January, February, and by the time it's November, December, the whole country will be on B40. What does that mean? That means more CPO is used, more about 1.2 million tons of CPO will be out of the global market for domestic consumption. Malaysia's first quarter production will be tight. Seasonally, Malaysian first quarter production is always tight because of holidays, Chinese New Year holidays, a strong demand from China, and weather is sometimes erratic with excessive rains causing problem for crop evacuation. Okay. Export demand will be firm, like I mentioned, main two reasons, Chinese demand for Chinese New Year and also Ramadan, which is this year, next year is in March. So that can cause a lot of shipment to go to countries like Iran, Saudi Arabia, and Egypt. So first quarter outlook for next year is firm and bullish to trade between 3,009 to 4,300 ringgit per ton. Okay, with that I will stop and happy to answer any questions. Thank you for your attention.
Okay, thank you, Dr. Satya.
Thank
So let
you.
me just share my screen here. Okay. So for the attendees, if you have any question, feel free to actually type on the question side so we can state it from our side. Then we will actually read out to the speaker for him to answer. Feel free to do so. We will give out around 2 to 3 minutes for you to type out. Okay, I think we do have one question here. So it's from Pang Chen Fu. So hi sir, what is the reason supporting palm oil is premium against soybean oil?
So what is it that's supporting the premium of palm over soybean oil, right?
Yeah.
Okay, I think at the moment right now, I think there's a lot of sentiments, positive sentiments that supporting palm price rise. Okay, and as I said earlier in my presentation, I don't think it's sustainable for very long. Um, the Indian government revised their import tariffs and raised it. That's bearish for exports to India, but India is in the buying period now because of the Diwali season. Okay, Then the Indonesians revised their export levies, which is now less compared to before. That means buyers might likely to switch or rely less on Malaysian products, because before the discount between Indonesia and Malaysia was about 40 US dollars for CPO exports, but now it's about below $20, 18, $15. So there is a lot of this shifting happening. So because of that, there is some optimism that, hey, Malaysian palm exports will remain strong. So I that's one thing. The other thing is that bean oil is under pressure. Bean oil is under pressure because of bountiful harvests coming up from the United States, and also there is a strong buying from China, particularly from Brazil. So bean oil is under great pressure to remain low, more than palm prices having the stamina to remain high. So I hope that kind of explains why. So when will this correct? I think it will take some time. So usually the United States harvest is September, October, November for soya beans. So prices will be bean oil prices may come back higher only in about December, January period, I think.
Okay, I think that's very good answer from you, Dr. Satya. So I think that should be answer your question, right? Okay. So I think there are no further question from the attendees. So if you have any, feel free to ask from our Philip side. Then maybe we will revert back to Dr. Satya. So thank you, Dr. Satya, for your insightful sharing today. So I'll just do some closing on my side here. So,
Okay,
for anyone that are interested to open an account with us, you can actually scan through this QR code. You can actually register to open an account on stocks, futures, and CFD as well. So, I'll give you guys 20 seconds to scan on this. Okay, so you can actually connect with us through our Phillip Capital Sandran Berhad social media. We do active on Facebook, YouTube, Telegram as well, and the LinkedIn. So on Instagram, and you can actually log into our website to know more details. We actually regularly update our website lah. So next, this is our branches details that you can actually contact through. So as mentioned, we do have 11 Philip Investor Center across the Malaysia. So you can actually screenshot this if you have any inquiries to ask on the event itself or seminar or any that are related to trading, I would say. Okay, so I think that should be it. Thanks everyone for your time here. So I think I shall do my closing. This is the end. So thanks, Dr. Satya again. I think it's our pleasure from Philip. We have you as our speaker today. So thanks, Dr. Satya.
okay,
All
bye.
right, thank you. Thanks everyone. Bye.